Well, I agree that these things are not along party lines, but people of a particular party think a certain way ideologically, so it's not really a surprise. I think that with any of these remedies, whether it's this or an antitrust remedy, that because these companies got large because of innovation and consumer choice, is that one has to be careful that the cure is not worse than the illness. I mean, before action is taken, it would seem to me in any of these cases that the agency should consider very carefully what is it they're trying to achieve. If these monopolies were achieved naturally, telling them, splitting them up or telling them not to act a certain way is inefficient. It's going to cause chaos in the short term. So you better be pretty sure that there's net harm before you get to the remedy phase.
And Mike, I'm just wondering, one of the things she said jumped out to me where she said, you know, I wanted public accountability, not just internal accountability at Facebook. The media has actually been successful in changing the behavior of a lot of these companies incrementally over the last many years. Even if the FTC didn't go as far as she might have wanted, could we still see Facebook end up having to respond with something more like that, like a periodic report on its actions?
I think Commissioner Slaughter made some really good points around accountability. I think part of why folks are saying Facebook is getting a kind of slap on the wrist here is two things. One, a lot of these processes are going to be internal, and really they don't typically share more information outside of the company than they need to or are forced to by law or by SEC disclosures. But I think the other really important point here is that they essentially negotiated a blanket indemnity clause for any violations that happened before June of 2019 that shields not only Mark Zuckerberg and Sheryl Sandberg, but any other directors and executives at the company. And that's a really big deal. It kind of says we don't really even necessarily know what's going to come out after this or if there are going to be further violations that even we didn't foresee now, but it kind of doesn't matter because we paid our $5 billion and we're safe in the long run.
If you're an investor, Kevin, you take a look at the stock, and it's amazing because when the news broke in the after-hour session, Facebook shares were down by as much as 1.8% or so, and now they're virtually flat. They look like they're going to turn positive. So you might think this is no big deal. It's simply headline risk. But at the same time, when you think about what Facebook might be handicapped in doing going forward while it's under DOJ and FTC scrutiny, it might be preventing the company from fully monetizing WhatsApp or fully monetizing Instagram or so on. And that could then impact the revenue growth rates for this company. How do you think investors should pick apart how this could affect Facebook's growth?
Yes, well, I think it is not so much the final remedy that's imposed, as you say, because in many of these cases there won't be a remedy imposed. But it's that cloud that hangs over the company during the course of an investigation. And I've represented companies in these sorts of situations, and it's daunting. And there won't be any major decision made by the company, whether it's to do an acquisition, create partnerships with customers, suppliers, without this being the elephant in the room. And it's just inherently the case that it'll cause them to pull back a little bit when they know everything that they are saying and writing is going to be reviewed by a government antitrust agency.
Mike.